Good morning, everyone, and happy Tuesday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you up to speed with what you need to know before that opening bell. So let's get into it. Alright guys, welcome back and thank you all so much for being here. This morning, we'll be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. If you enjoyed today's video, don't forget to hit that thumbs up button and make sure you're subscribed to the channel as well. Now let's get right into this morning's exciting stock market news. Not only are U.S. stock futures in the green, but oil prices are on the rise, along with Chinese stocks, as protests begin to settle down, and there's optimism that the Chinese government will ease some of their COVID-19 restrictions. Right now, Dow futures are up 0.11%, S&P 500 futures up 0.33%, and NASDAQ futures up 0.53%. After seeing a 65% increase to their driverless ride-hailing services in the third quarter, Baidu has unveiled a plan to expand this ride-hailing service in 2023. During their Apollo Day, Baidu outlined a plan to expand the operation area for their fully driverless robo-taxis, allowing them to reach more potential customers. Their Apollo Go currently covers more than 10 cities in China, including all first-tier cities. Baidu additionally revealed a series of new technology breakthroughs, including an AI big model built for autonomous driving perception and high-definition autonomous driving maps. Analysts currently rate the Baidu stock a moderate buy with an average upside of 58%. The Royal Bank of Canada has made a deal to acquire HSBC Canada for $13.5 billion Canadian. This will add $134 billion Canadian in assets and bolster their commercial bank and international product capabilities. The sale comes as HSBC is working to pursue a strategy of focusing its resources on its core markets amid pressure from its biggest shareholder to improve their performance. The transaction is expected to be completed in late 2023. It'll add 130 branches and more than 780,000 retail and commercial customers to RBC. If the acquisition is successful, it'll be the first big bank merger in a decade up in Canada. Analysts currently rate the Royal Bank stock a moderate buy with an average upside of 7%. And Walt Disney's returned CEO, Bob Iger, held his first company-wide town hall where he discussed his plans for the company. Iger told employees that he will empower Disney's creative teams, chase profitability over adding streaming platform subscribers, and spend money where it would add value for the company. Iger called the idea of a potential sale to a company like Apple pure speculation not rooted in any fact. He said that nothing is forever, but I'm very comfortable with the set of assets that we have and don't expect any headlines soon about deals. Analysts currently rate the Walt Disney stock a strong buy with an average upside of over 27%. Now moving over to notable earnings reports. In the after hours today, we'll be hearing from some big names, including CrowdStrike, Intuit, Workday, and Hewlett-Packard. In the pre-market this morning, we heard from Chinese video sharing company Bilibili. Their stock is on the rise after beating both revenue and earnings estimates. They reported a narrower expected loss of 63 cents per share, which was a big improvement of last year's loss of over $4 per share. Revenue came in at $814.5 million, which was up 11% year over year and over 25 million ahead of expectations. They also saw daily active users increase 25% year over year. Analysts currently rate their stock a moderate buy with an average upside of 81%. We've also heard from Hibbett Sports. Their stock is falling this morning after missing on both earnings and revenue. Their third quarter earnings per share of $1.94 was 55 cents off of estimates. Revenue came in at $433 million, which was up over 13% year over year, but 13 million shy of expectations. They just have two current analyst ratings that do come in with buys and an upside of over 10%, and we'll see how analysts weigh in following this morning's report. And then we have the Bank of Nova Scotia coming out with mixed results, beating on earnings but missing on revenue. Their fourth quarter earnings per share came in at $2.06 Canadian, which was 9 cents ahead of expectations, while revenue of $7.63 billion missed expectations by $380 million and did decline 0.8% year over year. Analysts currently rate their stock a hold with an average upside of 16%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Chinese companies are dominating the gainers board this morning as tensions over COVID-19 lockdowns ease. Leading the way is GDS Holdings. Trading under the ticker GDS, the stock is currently up over 11%. They're closely followed by Canjun under BZ. The stock is up 10.8%, and Bilibili under BILI up 10.6%. Our biggest losers this morning are led by the Chemours Company after they said that their full-year earnings were tracking below the low end of their previous guidance range. Trading under the ticker CC, their stock is currently down 7.8%. They're followed by Abcam under ABCM. Their stock is down over 7%, and Arch Resources under ARCH down 5.8%. So that is going to be everything for Tuesday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to hit that thumbs up button and to say good morning in the comments down below. I always appreciate hearing from you guys. Don't forget, you can also find me back on my JT Wealth channel. Recently posted a video on December dividend stocks, so check that out and let me know what you think. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.